Picture this. You're sitting in front of your screen, eyes locked on a chart. The setup is almost there. The candles are forming the way you imagined. The indicator is creeping closer to your signal line, and your finger hovers over the buy button. But you wait. You want just one more candle, one more confirmation, one more sign that you're right. Minutes pass. The market doesn't wait. By the time that perfect confirmation finally appears, the move is already halfway gone. The risk to reward no longer makes sense. You hesitate, frustrated, and then watch helplessly as the trade takes off without you. You weren't wrong about the direction. You were just too late. Now here's the question that cuts deep. What if your need for certainty is the very thing draining your edge? See, trading isn't a game built on guarantees. It's built on probabilities, on patterns that shift, on structures that evolve without notice. The market thrives in uncertainty. It breathes it, feeds on it. And yet, most traders suffocate themselves by demanding certainty, waiting for the perfect moment that never truly exists. This isn't just hesitation. It's a hidden cost. The cost of needing to be sure. And in this episode, we're going to uncover why chasing certainty kills adaptability, blinds you to changing market structures, and slowly erodes the one thing that truly matters in trading: your edge. Here's the thing about the human brain. It hates uncertainty. It's wired to crave safety, to want clear outcomes, to reduce risk. From an evolutionary standpoint, this makes sense. If our ancestors heard a rustle in the bushes, the ones who assumed danger and acted fast were more likely to survive. Certainty meant safety. Doubt meant danger. Fast forward to today, and that same wiring now plays out on our trading screens. You want the market to prove itself before you act. You search for patterns that never fail. You chase indicators that promise absolute confirmation. You tell yourself, if I can just be sure, then I'll take the trade. But here's the uncomfortable truth. In trading, that need to be sure is an illusion. Markets don't hand out guarantees. They hand out probabilities. Every setup you see is, at best, a weighted coin flip. You may recognize patterns, you may spot recurring behavior, but the outcome is never written in stone. The moment you demand certainty, you stop playing the probability game, and you start chasing a mirage. Think of it like standing at a crosswalk, waiting for every single traffic light in the city to turn green before you step forward. That moment never comes. And while you're waiting, everyone else has already crossed the street. This is the trap. The illusion of certainty seduces traders into overanalyzing, second-guessing, and missing opportunities. It feels safer to wait. It feels smarter to demand proof. But in reality, it's the slow bleed of your trading career, death by hesitation. And the irony? The more certainty you demand, the less adaptable you become. You stop flowing with the market and start fighting against it, blinded by your obsession with being right. So the question becomes, if certainty is an illusion and uncertainty is the market's natural state, how do we position ourselves to thrive instead of suffocate? Here's the paradox most traders miss. The very thing they fear, uncertainty, is the lifeblood of the market. Think about it. If the market were certain, if patterns played out the same way every time, if outcomes were predictable with 100% accuracy, what would happen? Simple. There would be no market. Everyone would pile into the same trades, take the same positions, and every edge would evaporate instantly. The system only works because uncertainty keeps participants guessing, shifting, adapting. Markets are not static machines. They are living, breathing ecosystems. Price structure isn't carved in stone. It's drawn in sand, constantly reshaped by tides of supply, demand, liquidity, and emotion. What worked last week might collapse tomorrow. A pattern you swear by may suddenly lose its power because too many traders discovered it and drained it of edge. This is why certainty is so dangerous. It blinds you to the fact that the market evolves. When you cling to being sure, waiting for the perfect confirmation, or insisting that this setup always works, you freeze in place while the market moves on. You're playing last month's game in this week's arena. Picture it like sailing. The wind doesn't ask for your permission. It shifts when it wants, changes direction without warning. The sailor who demands the wind stay steady is the one who capsizes. The sailor who adapts, who shifts the sails as the gusts change, that's the one who survives the storm and reaches the destination. The market is no different. It rewards those who can dance with uncertainty, not those who stand stiff, demanding certainty. And here's the kicker. Every moment you spend seeking proof is a moment you're out of rhythm with the flow of the market. Certainty anchors you down. Uncertainty keeps you nimble. So let's strip it bare. Certainty isn't just an illusion. It's a liability, because while you're clinging to it, the market is shifting right under your feet. On the surface, certainty feels like safety. It feels like you're protecting yourself, making smarter decisions, and being cautious. But underneath, certainty carries a price tag most traders don't see until it's too late. Let's break down those hidden costs. First, missed opportunities. Every trader knows the pain of watching a setup take off without them. Not because they didn't see it, but because they were waiting for that one extra confirmation. That small delay turns a high-reward entry into a late, risky chase. Over time, those missed moves stack up, and suddenly your edge isn't gone because the market betrayed you. It's gone because hesitation drained it away. Second, rigidity. When you chase certainty, you build walls around your thinking. You lock yourself into a single pattern, a single strategy, a single expectation of how the market should behave. But markets don't owe you that. They evolve, they shift, they break old rules and write new ones. Rigid thinking makes you blind. Instead of seeing fresh structures forming, you're stuck demanding the old ones reappear. It's like trying to navigate with last year's map. The roads have changed, and you're lost without realizing it. Third, the emotional toll. Certainty is heavy. Carrying the pressure to be right all the time wears you down. You overthink. You hesitate. You criticize yourself when trades don't work out, even though no trade was ever guaranteed in the first place. This constant search for safety isn't just mentally exhausting. It turns trading into a cycle of stress, anxiety, and self-doubt. And nothing erodes performance faster than a drained mind. And finally, false security. The cruelest cost of certainty is that it makes you feel safe, right before it betrays you. You wait for a setup that looks perfect. You enter convinced it can't fail, and when it does, the pain cuts twice as deep. Not only did you lose money, you lost faith. Certainty sets you up for devastation because it makes you forget the truth. Risk never disappears. Put simply, certainty is expensive. It costs you trades, it costs you flexibility, it costs you emotional capital. And in the end, it costs you the very adaptability that keeps traders alive in the markets. So if certainty is the silent killer, what's the antidote? The answer lies in flipping the script, from craving certainty to embracing adaptability. Here's the fork in the road. Two traders, standing side by side, staring at the same chart. One is obsessed with being sure. The other is focused on being ready. The certainty-seeking trader clings to rigid rules. This setup must look exactly like this. The moving average must line up perfectly. The RSI must confirm. The news must support my bias. Only then will I act. Sounds disciplined, right? But the hidden flaw is that the market rarely gives you picture-perfect scenarios. Twists, it bends, it fakes left before breaking right. And while this trader waits for the planets to align, opportunity slips away. Now look at the adaptable trader. They don't demand perfection, they work with probabilities. They recognize that no trade is ever guaranteed. Instead of needing to be right, they focus on being flexible. They know when to take the shot, when to cut losses quickly, and when to let winners run. They treat the market like a dance, not a courtroom. And here's the difference. The certainty seeker is rigid, like a tree with shallow roots. When the storm comes, they snap. The adaptable trader is fluid like bamboo, flexing, bending, adjusting, surviving every gust of wind. Think back to sailing. The certainty trader demands the wind stay constant, pushing in one direction so they can follow a straight line. But the adaptable trader? They adjust the sails with every shift. They don't waste energy fighting the wind. They use it whatever direction it blows to keep moving forward. This is the essence of adaptability in trading. It's not about being reckless, and it's not about ignoring structure. It's about being comfortable with imperfection. It's about seeing the market as it is, not as you wish it to be. And here's the kicker. Adaptability isn't weakness. It's the ultimate strength. It frees you from paralysis. It allows you to trade in flow with the market's rhythm. And it protects you from the very thing that destroys so many traders, the illusion that you can ever be 100% certain. So the choice is clear. Do you want to be the trader who waits, rigid, demanding guarantees that never come? Or do you want to be the one who moves with the tide, adapting, surviving, and thriving? Because in markets built on uncertainty, adaptability isn't just an advantage. It's the only real edge. So the big question is, if certainty is a trap, how do you break free? How do you stop choking on the need to be right and start breathing in the reality of uncertainty? The answer lies in reshaping how you see trading, not as a hunt for guarantees, but as a game of probabilities. Step 1. Shift your mindset from prediction to probability. Stop asking, "Am I sure?" and start asking, "Is this likely?" This small language shift is huge. It takes you from the impossible search for perfection into the realistic world of odds. Trading is not about knowing. It's about stacking probabilities in your favor and managing the risk when they don't play out. Step 2. Set your criteria but allow imperfection. It's fine to have rules. In fact, you need them. But stop expecting them to line up perfectly every time. A setup that meets 70% of your conditions can still be valid. Don't paralyze yourself waiting for the stars to align, because by the time they do, the move is already halfway over. Step 3. Manage risk, not outcomes. This is where traders trip over themselves. They think certainty means safety, but the real safety net isn't in being right. It's in managing what happens when you're wrong. Small, controlled losses are the price of staying in the game. Accept them, pay them, move on. Certainty won't save you, risk management will. Step 4. Reframe losses as feedback, not failure. Every time you take a loss, instead of spiraling into self-blame, ask, what did this teach me about adaptability? Sometimes the market just shifts. Sometimes the probabilities didn't fall in your favor. That doesn't mean your edge is gone. It means you're playing in an environment where edges always carry variance. Step 5. Build awareness of your certainty moments. Keep a journal, not just of your trades, but of the times you hesitated waiting for more proof. Track how many opportunities slipped away because you wanted to be sure. When you see those missed chances on paper, it becomes painfully clear how costly certainty really is. And finally, step 6. Embrace uncertainty as your advantage. Here's the mental pivot. Most traders fear uncertainty, which means they avoid it, hesitate around it, or freeze when it appears. But if you can lean into it, if you can act when others are paralyzed, you step into the small minority who actually survive long-term. The mantra becomes simple. My edge isn't knowing. My edge is adapting. Say that to yourself every time you feel the need for certainty creep in. You're not here to predict perfectly. You're here to dance with imperfection and still come out ahead. Let's circle back to where we started. That moment, you, staring at the chart, finger hovering, waiting for one more candle, one more confirmation, one more sign that it's safe to act. You weren't wrong about the trade. You were just paralyzed by the illusion of certainty. The truth is, markets don't reward those who wait for guarantees. They punish hesitation, they exploit rigidity, and they expose every trader who insists on being right. But they do reward the ones who adapt, the ones who see uncertainty not as a threat, but as the natural language of the market. Here's the bottom line. Certainty is a trap. It lures you in with the promise of safety, but it costs you opportunities, flexibility, and emotional strength. Adaptability, on the other hand, frees you. It doesn't make you immune to losses, it makes you resilient to them. It doesn't give you guarantees, it gives you flow. So next time you sit there waiting for perfection, remember this. The market isn't asking you to be sure. It's asking you to show up ready to adapt. Because in trading, as in life, certainty is an illusion. But adaptability? That's the only real edge you'll ever need.